hashtag replay just so I know that you're watching.
Property guru George Markowski from Positive Property Solution joins us now. George, good morning to you.
How are you, George?
Our goal, our unstoppable mission is to empower 10,000 Australians to create financial freedom through investing in property using the Markowski method. Okay guys, we've got 10 seconds left. Can't wait to show you a great, amazing session tonight. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Hello and welcome Freedom Fighters.
Hello, Freedom Fighters.
Georgie and Stacey are in the house. Now guys, if you're watching live, please type in hashtag live. And for you guys watching this, the replay, because most people watch the replay, funny enough, I want you to type in hashtag replay just so I know that you're watching. And we've got a really interesting one today. Is the market going to crash? And a lot of people have been asking that, haven't they? So what's been going on? There's been a lot going on actually. The stock market has taken a bit of a pounding, and so has Bitcoin, and a lot of things like that have taken a pounding. So Bitcoin's just been devastated. The stock market's been crashing. Things are going down. So the question, a lot of people are saying, are we on a sinking ship? Do we jump off now? Do we stay on board? What do we do?
Yeah, I had a couple worried today.
Yep. And what were they worried about? What was the main thing they worried about?
Yeah, about that exact thing. Yeah, that it's going to crash and that it's the wrong time to get in and all that side of things.
Yeah, so I suppose, the stock market and Bitcoin has already actually corrected. And now the one question people are going to ask is, what's going to happen to property? The question is, are you going to get involved in property now and then suddenly lose all your money?
That's it.
I'll have the answer for you by the end, so don't worry. You know what I mean? Because the economy's been a bit schizophrenic lately. You know what I mean? It really has. Because what's happened is, the stock market's been very bullish, going up. Bitcoin's been going up. Property's going up. Everything's been going very bullish, going up heaps. And then suddenly we had this massive correction of Bitcoin, and then suddenly the stock market's been going. The US stock market's been hit hard. Australian stock market's been hit. And things are getting bearish again all of a sudden. Now, what happened was at the end of COVID, because all the money that was getting pumped in, that really inflated stuff. And I've been telling people there's going to be inflation. I've been saying this for a while now. And even though the news and everything's saying, no, there's no inflation, well, guess what? It's actually happening right now. I've been telling people it's going to happen. And I usually predict things pretty early. So there you go. Not all the time, but I did this with this one. And the reason there's inflation is because it's very simple math. You get more dollars that are printed, therefore you get more inflation. Because, let's say if there's only $100 billion available, then you've only got a limited supply, but then you've got 200 billion, well, that's going to push everything up because people have got more money. And people are flush with cash at the moment. So it's actually very surprising that people are so bearish about stocks and Bitcoin. But see, I've been saying this for a while, and I'm going to ask the audience for this. Audience, what I want to ask you is, has anyone heard this term safe as Bitcoin?
Nope.
What about safe as shares? Can someone type in what it is? Right? If the first person that gets the answer right, I'm going to give you a free copy of my audiobook, which is going to be selling for $20. So $20 free audiobook. It's getting released probably next week or two. Can someone type in the answer? Someone said no. Does that mean no, not type the answer?
No.
Okay, so that person, if our team can reach out to them, the person who said safe as houses, here it says Facebook user, but I'd imagine that you've got a name there. Can you type in your name? Because I want you to get the prize. You deserve the prize, and thank you.
That's it.
Yep. So the deal is, I've been saying this for a while, and I'll tell you what the difference is between property and Bitcoin and shares to an extent. So property, they call property real property because it's real.
Because it's real.
And that's why it's called real
tangible.
property.
Yeah.
That's why they call them realtors, right? You think where did the name realtor come from? Okay, Kane Fattorini got the prize. Well done. So where did the word realtor came from? Because they're selling and dealing in real property, and real property is something you can actually put your hands on. It's earth, right? And there's something special about real property because it's real.
Yeah.
I'll tell you why. So Bitcoin is just a bunch of numbers out in the middle of the internet. That's all it is. You can't touch it. You can't hold it. Now, there's a limited supply of Bitcoin because it's an algorithm, right? And there's a limited supply. However, for Bitcoin to have any value, people need to believe in it. So if everyone stopped believing in Bitcoin today, all of a sudden, what would happen to the price of Bitcoin?
Down.
It would go down. But if everyone stopped believing it, not only would it go down, it would disappear. It'd be gone. It wouldn't exist anymore. So because Bitcoin's a normalization, what a normalization is something that you can't physically touch.
There you
It's a
go.
normalization, and normalization can turn into nothing, even if they're real. And I'll give you an example. There was a thing called the Soviet Union a while ago, right? Which stretched from Europe all the way to Asia. It was massive, hundreds of millions of people. Actually, it was a world superpower. And then during Glasnost, Gorbachev and his team had a meeting, and they signed these documents, and suddenly the Soviet Union, from dominating the world politics, being the second most powerful superpower in the world, ended up disappearing and not becoming non-existent with just a stroke of the pen over one day. How weird is that?
Disappeared quick.
So one day it controls the whole world, millions of people are depending on it. You know, you can live or die by the stuff they make and say and do, and then suddenly it's gone. Because the normalization is not real. And
Can't happen
Bitcoin,
with
like the
property.
Soviet Union, is a normalization. It's not real, and it's about belief. Now, with companies, with share market, what share market is public companies where people, everyday people, own shares in the share market.
Yep.
And what happens is, like, for example, Tesla. Tesla's an amazing example, and SpaceX is as well. So Elon Musk is very big on social media. He's very popular. And what happened, because Elon Musk is so big on social media, Tesla and SpaceX has grown exponentially. And part of the reason is because he's so popular and there's a lot of attention going on there. And it's gone through the roof. The shares in Tesla and SpaceX are massive, and maybe they're well deserved, maybe they're not. I don't know. I'm not an expert in shares. However, if people stopped believing in Tesla and stopped buying Tesla and didn't believe it was going to do well, it could actually destroy it. And there's an example. I mean, there was a company called WeWork, which was worth $40 billion at one stage, and now it's gone down and lost $39 billion because people stopped believing in it. Because what happened was the CEO went public. He published what he was doing, and he was getting all his private jets and spending all this money and wasn't doing things properly. And people said, "No, we don't believe in it anymore," and it just crashed.
Just crashed, just like that.
And that can happen to shares too. And gold and silver is physical, but you can't really eat it unless you swap it for food.
That's it.
So yes, so there you go. But the deal is, there's one intrinsic value of property. And this is the deal. With property, even if you don't believe in it, it's still there.
Someone always needs somewhere to live.
Yes, exactly. But even if everyone stops believing in property, you still need somewhere to live. And you can't not believe in it because it's there. You know, it's a bit like not believing in the sun.
You can touch it.
Yeah.
You can't touch the sun, but you can
look
touch
at the flat earthers. There's some flat earthers out there. They don't believe that the earth is round, right? But it doesn't matter. It doesn't make any difference. The earth's still there. So there you go. So that's part of the thing. So what's been happening? Well, Bitcoin's gone down, shares have gone down, and you know, it's a bit disconcerting because what that means is, it means even though we've been printing all this money, that the share market and Bitcoin finally started getting effective. So this is a lag-on effect of the whole COVID situation and what's happening. And if people are scared, they've got a right to be scared. So there's nothing wrong with that. And I get that, because what's happening now is we're going to have a bit of a correction, and what they call a correction sometimes is a downward spiral when it comes to a lot of hard assets.
Yep.
Now, the fact of it is, most of these corrections, especially the fundamentals at the moment, there's going to be a V-shaped correction. It's like a V. So what happens is it goes down, hits the bottom, and bounces straight back up again.
Just wait it out.
Yeah. So at a V-shaped recovery, I was saying this when COVID hit, there was going to be a V-shaped recovery anyway. And that's what's exactly happened. So how is that going to affect property prices? That's a good question.
If you just Google it, it says they're going to go up 5%.
Yeah. If you Google it. But
if you Google it.
yeah. But you know what? We don't listen to people on Google. We want to talk to people. Okay, so
but that's what most people will do before they come on.
Yeah, they will. Yeah, I'm gonna tell you what it's really gonna happen, right? And this is an interesting fact. So shares are down, Bitcoin's down. Well, let's talk about what else is happening in the market. Okay, unemployment has hit the lowest it's ever been since 2008, right? So we've actually hit 4.2% unemployment rate, right? How amazing is that? And if you look at employment to population ratio, the employment to population ratio has been the best it's ever been. What does that mean? It means that anyone that can work is working right now as we speak. There's hardly anyone without a job. And if anyone hasn't got a job, you know, maybe they're stuck in that sort of a niche that COVID's really stuffed up recently, and that's going to change very soon. And you know, and if you are in that position, you know, I'm not trying to have fun about it because it's not a nice place to be. But the fact of it is, most people have got a job, and a big percentage of people who don't have a job don't have it because they don't want one.
Yeah.
Or they're stuck in that niche position where it just, at the moment, impossible. Because the challenging thing is, like, you know, restaurants, airlines, hotels, things like that at the moment are very challenging. And there's other industries that I don't even know of that have been affected as well. But all in all, in the general terms, it's really good news for everyone that unemployment is right down. The other thing is consumer confidence is super high at the moment too. And when unemployment is really low, home ownership goes up. Pretty normal, isn't it? I mean, you know, it's a bit like how avocado and chicken go together. Well, you know, low unemployment rates and home ownership go hand in hand.
Yeah.
Now, there's 16,000 suburbs around Australia, 16,000 markets. And invariably, there's going to be some of these suburbs that are going to get hit hard. Just warning you guys, okay? I warned people back in 2008 before the GFC hit, right? I was telling them this is what's going to happen, right? And that's the fact of it. It's going to happen again. But out of those 16,000 suburbs, there's always a bunch of suburbs at the top, especially the top 100, the top 500.
So you have to be very particular.
That's right. And those suburbs, they're going to do well no matter what happens, because there's more supply than demand. I mean, more demand than supply. Well, they're completely wrong.
I think they got it.
Yeah. Because, and that's the fact. So the key is, in a time like this, you need to be super careful and be really diligent in what you get. Because we had the first phase of the boom already happen. That's the fact of it. The first phase of the boom happened over the last year.
Yep.
Now, we're talking about the biggest boom in recorded history. So there's only one part of it, you know what I mean? And there's going to be more people, right? And the thing is, you know, there's probably some people are probably been sitting up at night going, damn, you know, I don't want to miss the next boom. I don't want to miss the boom. I don't know if you watching this at the moment, you've been saying that to yourself in your sleep or at home or whatever. There's a lot of people saying that. And I've been hearing it. Because people don't want to miss the boom.
And they won't if they do it right.
Exactly. And look, and you haven't missed the boom just because you missed the first phase. There's more to go, a lot more to go. Interesting. I was talking to a couple of clients today, actually, that came to visit me. Their names are Dave and Steve Johnson. And they joined our program about 4.5 years ago. And what I like to do with our clients is sit down and go through the numbers and see how they went. And what happened was that Steve, actually, I've got the numbers here. I've got them written down because this is really cool. And I've done a whole video and stuff like that, but I'm going to just share this because it's really cool. So Steve, he bought a property for $630,000, and he paid $18,000 out of his own money. He used equity for the rest. Now, Steve didn't have any equity of his own, so what he did is got his father to chip in and help out to get the equity, which is very smart. A lot of young guys are doing that, right? So anyway, so he did that, and now the property is worth $750,000. So in 4.5 years, he's made $390,000.
That's nice.
Right? And you know what his rate of return on cash is?
What?
1,966%. Right? Yeah, people talk about, 5%, 10%, 1,900% return on his money.
Yep.
How big is that number? It's almost like it's hard to believe. It's hard to understand. It's hard to grasp, right? Now, this is the deal. By putting that 18 grand into property, he's made $391,000. Now, imagine if you put that money in the bank for the same 4.5 years. And I calculated that. And when he first came to our program, it was 2.5%. So I'm going to pretend it stayed at 2.5% because obviously it's gone down now. He would have made $2,100. Right. So total in bank interest he would have made was 23 grand over 4.5 years instead of 391,000. What a difference.
Huge difference.
And you know what? This is the deal. Most people aren't smart enough, and it's not their fault. So I'm not calling them dumb, but they're not educated enough. They don't understand. They don't have enough confidence to actually get their money out of the bank and put it somewhere it's going to work. And people think their money is safe in the bank. And what I'm saying is that's nothing further from the truth. You know what I mean?
It's going backwards.
Big time. So if you think your money's safe in the bank, I'm sorry, but you're delusional. You're as schizophrenic as our economy at the moment because it's not right. You're losing money in the bank and you should avoid it at any cost unless it's an offset account. And then it's doing something. But really, having money in the bank is terrible at the moment. Yeah. And it's going to get worse with this inflation, what's happening. So what's happening now, we're going to start getting inflation and things are going to go up in value. And I believe that the right properties, hard assets are going to go up even more. And we did that one-day workshop on the weekend with Robert Kiyosaki. And I was showing the stats and explaining how properties have never been as affordable since the 1980s. How many people here wish they had a time machine and they could go get a DeLorean and go back to the 1980s and invest in property? But who would love that? Yeah. Type in if you'd love to do that. Type in yes. I'm curious. And who'd love to have a time machine, go back and buy in the 80s? Because those people that are watching and wanting to do that, you can actually do that right now because it is the same time.
Yeah.
It's the same cost.
Same people will be saying this in 10, 20 years from now.
That's right. So Belinda Douglas says, me, definitely. So guys, this is the deal. What I've done, I've spoke to Robert Kiyosaki, and Robert and I are coming back for an encore this Saturday at 9:00 Australian Eastern Standard Time. So guys, if you missed my last workshop, because we had 4,000 people register, Zoom got broken and we couldn't get everyone in the room. So I apologize if you couldn't get in the room. That's why we're doing an encore. Robert and I are doing an encore this Saturday. So if you want to come to Masters of Wealth, type in hashtag Masters of Wealth. If you missed last time, and I'll get you a free ticket.
Yep. We'll make sure you get in this time.
Yep. So type in hashtag Masters of Wealth. That's what we're doing. Excellent. Yeah. And if our team can reach out to people typing in Masters of Wealth and help them get into our thing, that'd be great. because that's what's happening. So we're ready for Q&A time now. Because when does our weekly chirp start?
It starts in half an hour.
Great. We're ready for Q&A, guys. Let's do some Q&A and do this.
Know what that one is. All right, perfect. All right, so anyone who wants to ask a question right now, and
yeah, so while we're waiting for that, what I'm going to say is, 4.2% is absurdly low unemployment, and lowest since 2008, just before the GFC hit. Right. So what that means is there's just a pile of money sloshing around the economy, which is really good. And whenever there's lots of money, guess who the big winner is?
who's the winner?
Housing.
Housing.
And if housing wins, who's the real winner? The property investors.
We are.
Yeah, that's right. We are. High five. And you
Yeah.
recently settled on an investment property, I heard.
Yes.
Congratulations. Well done. How exciting.
Thank you. Yes, very exciting.
That's what I love about our team, because our team put their money where their mouth is. Like, our team are all active investors, guys. We don't just talk about it. Stacey doesn't just go blah, blah, blah. Stacey's an investor and a successful investor at that. And I'm very proud of you, Stacey, because you're successful. You're really good at what you do. And you really love helping people, get into property, and you're changing lives. You seriously are, and you should be very proud of yourself, because it's an excellent thing to do. And you know what? Getting paid to help people invest in property is pretty cool. Isn't it?
Best job ever.
When you
So here we've got, is Queensland still the favourite state for investing? Someone's written.
Look, it is. But the deal is, in Queensland's a funny place where you can get two suburbs. You get a really shit suburb and a really good one right next to each other. So with Queensland, you got to be super careful where you invest. But it's an excellent place to invest. Really excellent. I suggest you do that. It's excellent. It's really good.
All right. Do you predict a rate rise this year?
Look, I reckon a rate rise is on the cards. Absolutely.
Yeah, same.
I think it's on the cards. We've been waiting around. What's happened is the RBA said they weren't going to raise the rates until unemployment was low enough, which it is now. But next, what they want wages to be high enough. So it's going to depend on the wage factors. So I need to look at the stats, next stats that come out in the next few weeks about wages. Once we get the wage stuff out, once wages get the point where they were expecting it, I think it's 3.1% or something, wage growth. Once we get the wage growth, there's going to be a rate increase, yes.
Yep.
And how's it going to affect things? Well, it's not really going to make a lot of difference. It's just going to make it harder for people to invest, right? Yep. Which is going to slow the market down slightly, which, as far as I'm concerned, is excellent. I don't like a market that's too hot, personally. In Melbourne and Sydney, there's already suburbs that have actually gone down, and they've cooled off. And there's even suburbs in Adelaide and Brisbane that have gone down as well. So it's actually, certain parts are cooling down. And I'm wrapped. I'm so happy with that, seriously. Because
it's good for us.
What that means is phase one is over. Phase one of the boom's gone. And guys, if you missed phase one, I suggest you get onto phase two. Because phase two is coming very soon. And
Definitely.
Phase two is going to be good. And I really suggest you get on board phase two. Because it's going to be like probably 5 phases. You've missed the one. We've still got 4 more to go. And I reckon you want to, if you got 5 phases, try to get all 5. If you can't get all 5, get 4. Can't get 4, get 3. But
That's
the more
it. We're getting every single one, aren't we?
Yeah, exactly. We're going to get into every single one, absolutely. And that's what I want you guys to do. And whenever I discover new phases, I'm back in there. You know what I mean? Yeah.
So how do we go about knowing where to buy? Now, I think I spoke to someone about this today. It could be them on now. So I believe that's a purchase to the course, the education part of the course.
Oh, okay, yep. And also what I was going to do is I have a shout out. Anyone that joined our program for last weekend, if you're on, please say your name, say hello, #hello. It'd be great to see you. Also, obviously, with the Sherpa after this, where I get to meet you in person, which is great. Yep. But here, I'd love a shout out. And how do we know about where to buy? What I do is I constantly come out with all the new stats of what's happening. right? And to show you guys where you need to buy. And we go through this every week, go through different things. So we go through all our different education pieces week by week, drip feeding you, teaching you, so you get all the skills to know what you're doing. And what happens is the more questions you've got, the more answers I've got for you.
Yeah, exactly. And it's part of the course that they've just enrolled into is how to get to those areas. How to work out.
Well, we got the education.
Yes.
What happens is, and what I want to do is I'm going to next week I'm going to go through our basic what do you call it, our ascension model, and show people where they're at and what they're doing in the program, which is important.
Yeah.
Because I think hi from Tony. Hi Tony, how you doing? Welcome. Hope to see you at the shirt today. It's going to be great. And I really think being around a group of like-minded people and learning about property is going to be very exciting for people. And we're going to be going through this and teach people what to do.
Yeah, that's awesome. People will really like that one. Well, thanks.
Stacey. Congratulations. Well done.
And live. Okay, perfect. And Tony, you already said hi to Tony. Okay, perfect. No, I can't wait to meet some of our new members tonight, jumping onto the Sherp. I know there's going to be a few there. I spoke to them today. Yeah,
because there's because the one thing is about this boom that's coming. There's most investors, right, are investors in waiting, and they just wait and wait and wait. They never spot a boom until it's been gone. And that's the problem.
Yeah, it's too late by the time they've got to it.
Exactly. And that's why I want to try to help people prepare and get ready. And that's the whole point. And, people that have joined our program for last Saturday, we're going to get them on the $1 Million Game Plan, quick start 14-day challenge. So we can get them through every step to get them really ready to rock and roll.
They're all turning up for the first step next Tuesday night.
Excellent. That's great. I think we've got a lot of people doing the challenge this time around. We've got hundreds of people registered for it, like over 400 people.
Yeah, that's amazing. Oh.
Simon Jaffa, I'm ready to rock and roll. Good on you.
Oh, I'm ready to rock. So you did that.
I did that. Did I say it right? Is that Simon or Simon? Jaffa.
No, you're right. Simon, yeah. I believe.
Someone saying to Stacey, thanks for the amazing job that you do, Stacey. Stacey, you're fancy, which is great. Yeah, so at the end of the day, when it comes to finding where to buy, I want to give people a little bit of an outline on what's happening. What I'm doing is I'm going to be upgrading my equipment next week. I've got a specialist coming in this Friday, so I'm going to be able to do a lot more drawing and graphs and really show you guys a lot more visual stuff. For the guys listening to the podcast at the moment, probably not good for you, but it's great for the people that are on the actual Facebook or YouTube and whatever, right? And if you want to read this out.
Yeah, with the possibility of rate rise, this should slow the market, giving us investors more properties to choose from.
Absolutely. And at the moment, it's been very hard. One good thing about our buyers group, right, which is part of the coaching program in the premium program. One thing about our buyers group, which is cool, is we get first option on most new property projects that happen in Australia. That's why they call me John Wester Property, because it's my job to have a look at them, and if they're good enough, I take them for our clients, for our buyers group. And if they're not good enough, I reject them, just like John West does with his tuner, and give them to realestate.com or Domain or the other groups around the place. And we're in a very privileged position to be there. And that's because I've been around for so long, and because people trust me and developers trust me, because we've got a good quality group of buyers here. We're not just anyone, you know what I mean? And we're big.
And Robert Kiyosaki doesn't just work with anyone, George.
No. And I love the time last weekend where he said that I'm better than him when it comes to property in Australia.
Yeah, I bet you did.
Yeah, that was pretty cool. I didn't expect him to say that, even though it's true.
In the Australian market, like how he would not know as much of that.
No, he doesn't. But he knows the principles. He really does. And
yep.
A lot of people saying that, what him and I were saying was different, but it's not actually. So Robert Kiyosaki is focusing on the world economy and what's happening in the world. And we've got the same opinion. What's happening in the world is the stock market and Bitcoin are going to have a correction, and so is property.
Yep.
Right? And even in Australia. But the part that we've got to understand is there's a percentage of the market, and there's our top 100 that are going to weather the storm and actually do well, just like we did in GFC. So if you look at GFC happened and there was a crash, property, stocks, shares.
A lot of
Bitcoin,
people lost money.
Everything went down, right? In everything. And lots of people lost money. And the sad part was, this is a real sad part, because the baby boomers were getting ready to retire back in 2008. That's a big chunk of the population. And they'd been working for 40 years, 50 years and saving all their super money.
Mm.
GFC comes and just knocks it in half.
Yeah.
Literally cut their savings in half, their retirement savings right at the end. You know, imagine you're almost at the finish line and then suddenly, bang, this big wave hits you and half your stuff's gone.
Half of it's gone.
It was terrible. It was devastating for so many people. It was horrible. You know what I mean? And it was terrible. And the problem was it happened, and it's going to happen again, and it's going to happen again.
Yeah, cover yourself.
The deal is you gotta just prepare for it, and you know what you're doing. And but the thing is, and this is the really cool thing, not that I'm bragging or anything, but our members in the GFC, what do you think happened to them? Because there's three options. Did they lose money like everyone else? Did they break even? Did they make money? What do you reckon?
They made money.
That's right. Exactly. They made money. And you know why they made money? Because they had the three pillars of wealth. Because, you got cash flow, growth, and strategy. Those
Right
are the
place.
three pillars, right? And
Yep.
So if you think of a stool, right? If you had two legs in the stool, audience, tell me what would happen if you sat in a stool with two legs or one leg? Unless you're an acrobat, what would happen? You'd fall over and hurt yourself, wouldn't you, right? But if you had three legs, what would happen? It's pretty solid. You could stand on it. A three-legged stool is actually more solid than a four-legged stool.
Yep.
Because it's got the 3 points. Now, with the three legs, there's 9 accelerators that I'll talk about. And the 9 accelerators are non-negotiable. And this is the point. If you had a three-legged stool and someone sawed off a bit of one of the legs, it wouldn't work anymore, would it? That's why you need it all to get it right. So therefore, any strategy can work in an upswing market, but it's when it's tough, and that's the important part. And the good part about this strategy, it works whatever the market's doing.
Yeah, that's it. Balance. It is. It's about balance.
Yeah, exactly. It's about balance. And that's what it's all about. So we survived through the GFC and did really well, and we're going to do this as well.
Yeah.
Right? That's the fact of it. And I'm very confident. Not only have I done it for myself, but I've helped hundreds and hundreds of people do it. So I'm very confident it's going to be easy. I know I can see what's going on from a mile away. It's going to be good, right?
And I'd rather be best investing with someone that's actually done it and been through one of these financial crises before and survived it, rather than trying to guess my way through it on my own.
Yeah, but the funny thing is they're all the same, all of them. So there was Black Monday. If you look back, there was 1918. There was the flu pandemic.
Yes.
They called it the Spanish flu, even though it was Spanish, but the Spanish media was the first one to talk about it. No one else talked about it. Then they had Black Monday, right, which was in the 1987, where it crashed.
Oh, yes.
And that destroyed the market again. And then we had the GFC. And then now we've got the COVID thing. And the fact of it is, they're all V-shaped recoveries. And as soon as there was a correction, the markets did a lot better. And see, the fact of it is, some people were waiting to get in, right? So what happened was, this happened GFC. And I was telling people, don't wait. You need to buy property. So GFC came along, and there was a correction. And everyone said, oh, shit, property shit. It's never going to go up again. It's terrible. They always say that. I hear that all the time. And I said, look, you just got to get in there, because if you don't have property, you can't make money out of property. That's a fact. Would you agree?
That's it. Yeah. You don't have anything there.
Right? A lot of people don't get that. And you really need property to make money out of property. And if you want to try to time the market, you're going to worry yourself sick, and you're never going to get anywhere. So see, a lot of people think time the market is important. I'm saying no, time in the market, not timing the market.
Yeah.
But
The longer you're in there, the more you make.
yes, however, the longer in there, the more you're going to make. But getting the right property is the important part. Right? Then you don't have to worry about your timing. You just get the right property and you're set.
Yeah.
All right? And that's what's going to happen now, next. So there you go. Yep. So there you go, guys. Thank you very much for everyone coming down, having a look, having a chat. If there's any other questions, you've got to be really quick because we're going to end this very soon. And our group is called the Australian Property Chat. Now, I'm thinking about changing it to Australian Property Investor or Australian Property Investors. Can I have a vote? Who likes Property Chat? Who prefers Property Investor? Who prefers Property Investors? Can someone please type in the chat and let me know?
Let's have a look. Yeah, I haven't heard anything yet. Hang on. Let's wait a few moments.
What do you think? What are your thoughts?
I think investors. It's very direct. Yeah, investor. It says Australian Property Investors. Yeah, I just think there's many of us, and we're all doing the same thing. So that's it's not. We're not just talking it. We're doing it.
Yeah, we're not just chatting with. Yeah, exactly. Because I thought we like to have a chat, but we do more than chat. We actually invest.
Yeah.
So we get a bit of elbow grease in there, get a bit dirty, get it in amongst.
We get it done.
And then, you know what? Because chatting is almost like, people sitting there smoking their pipe, having a chat,
yeah,
cognac.
I don't have one of those.
Anything, right?
I need a pipe.
Yes, I need to get myself a little pipe. Yes. So there you go. So guys, thank you so much. And members, remember, we're going to be in the shirt. Come along. It's going to be great. Look forward to it. Looks like it's going to be investor or investors. People don't like the word chat. So we're going to think of that. I think investors. Australian Property Investors. Investors,
because that's what we are.
Right. Well, I'm going to change. I'm going to go and change the group name. Can't wait.
Let's do it.
Let's do it. Okay. So let's get ready for the Sherp. We've got a big day for the Sherp, and I'll see you there.
All right. We'll see you there. Thank you. Bye.
Bye.